Hi everyone, let's go through my high time frame, medium time frame and low time frame alternative and preferred scenarios, including potential trading setups, and make sure to check out the timestamps in the video if you're looking for something specific. So the first scenario that I like to show you on the high time frame, which is less likely, is this 5-wave structure, a 1, 2, 3, 4, 5, which then is part of a bigger wave A followed by a B and then a C to the downside. The reason that for me this is less likely has to do with this wave 3. The minimum target of a wave 3 is the 1.618 trend-based fib extension taken from the all-time high to the low of 1 to then the high of 2. And as you can see, wave 3 did not reach this target. Instead, it actually turned around in the wave C target, making it more likely this is a 3-wave structure instead of this being part of a 5-wave structure. The second scenario I'd like to show you, which is also less likely, is basically for the same reason, but in this case, wave A has already been made and we're now looking for a wave B to the upside. In this scenario, we again have an impulsive move with, once again, wave 3 not hitting the wave 3 targets, as that is below the yellow 3 over here, but instead it turned around for a bounce for wave 4 at the wave C targets, making it more likely this is a 3-wave. Now, what is interesting though in a potential wave B over here is that wave A tends to hit the 382 as a minimum target for a wave A before it goes down for a B and C. We did not yet hit the 382 target. However, we are on our way as wave 3. This target, basically the 0.382, sits at 27.2K. Now, the third less likely scenario is that the whole bear market is already over and we're looking for a lot more upside to come in a new bull run. The reason that this for me is less likely has two reasons. One is that this ABC has a very long C wave compared to the A and the B in an expanded flat. So then this is a 3-wave A, 3-wave B that takes the high of A over here, the origin of A, and then we have a 5-wave structure in C. Now usually in an expanded flat ABC, wave C is quite fast and swift to the downside, very impulsive, but it doesn't take this much time compared to wave A and wave B, as wave C in this scenario is 5 to 5.5 times larger than A and B. A second reason is that wave C closed with weekly candles, as I have on the weekly time frame, below the maximum target of the 1.618 that you can see over here, which also makes it less likely. Beside, once more, this being a wave 3, less likely because it did not reach the wave 3 targets that are below. Then we go to the fourth high time frame scenario that I believe is less likely. It already starts now to become more likely as we're working towards my most likely scenario. But in this case, we have a WXYXZ. Now over here, what makes this scenario less likely is that in this case, wave X, the red one over here, did not reach its minimum target of 0.382, which usually is the minimum target for wave X. And also wave Z reached its rare target, but not the common target for wave Z, which is the white line and the pink line sitting at 10.2 and 12K. So because wave X did not hit the 382 and wave Z is only ending at the rare wave C target, it makes it a little bit less probable that this scenario can play out. Now this is the very bullish scenario, that this is then the corrective, the bear market pattern basically, and we're now looking for more upside. But once again, this is an alternative scenario because of X and because of Z. The next scenario that I want to show you, I have to go to the daily time frame for this one, is still an alternative scenario. And in this scenario, wave X and the end of wave C are already in. So over here, wave C and X have already ended with inside the red X an A, B, C expanded flat with then a 1, 2, 3, 4, 5-wave move. And then we're now looking for more downside in a wave Y. Let me zoom out a little bit. So we then look for downside in a wave Y in a 3-wave structure. And this 3-wave structure can be very complex, with currently looking at an expanded flat then in this first wave A. And an expanded flat is a 3-wave, 3-wave, and then a 5-wave move to the downside in this green ABC, with the most common target for wave B being the 1.38 and the 1.236 Fibonacci retracement taken from the high over here to the low of A. However, and you'll see that on a medium time frame, we're still looking for a second wave down before eventually a third wave up. So therefore, this is alternative. We already went very high, and I believe this wave C might not yet be finished, as that is this scenario I'm showing you right now. So in this case, we have a W, so a three-wave structure from the all-time high to the downside, an ABC, followed then by an expanded flat ABC in the bigger wave X, and then we move down for wave Y. Now, the most common wave C target is the white box that you see over here, sitting between 27.7K and 34K. Important is that this white box has confluence with the support resistance area over here, the red box. It was support over the past couple of years, but it might turn out to be brilliant resistance when we revisit this area for then a potential short trade that you can see on the right side. So an interesting trade can be to enter inside this white box area with the stop loss somewhere above. Please keep in mind that this is still a rare wave C target above the most common wave C target, but then one can trade it to the downside for wave Y, with the first target being about 12.7K. Also important to note is inside this white box we have the 3A2 over here taken from the all-time high to the low of W, which is a, again, minimum target for the red wave X, and it currently sits at 29.7K. So that is a very interesting level, and in general the white box is an interesting target. We also then had, of course, the impulse, because we're now looking for a five-wave structure to the upside, or at least the fifth structure of this 1, 2, 3, 4, 5. And we did have a relatively easy setup over here. Wave 4 is not allowed to close below the 0.5 fib in a 1, 2, 3, 4, 5, and also wave 4 is not allowed to enter the price action of wave 1, so the potential trading setup was entering at the lows over here, stop loss at the high of wave 1, as that is the invalidation, trading it to the upside, then towards this most common wave C target. Now let's then go to the medium time frame scenarios that I have, which are two scenarios. The one is the bearish scenario, and the other one, of course, a bullish scenario. Now in the bearish scenario, it looks like the high time frame bearish scenario that I showed 2 scenarios ago, which then is an expanded flat. So wave C again is already in, wave X is already in, and we move down in a 3-wave structure in wave A, and we are now working on a 3-wave structure in this wave B. Now as you can see, however, this move to the upside is very impulsive and does not show any sign of this being a 3-wave structure. However, it almost hit already the expanded flat wave B target of the 1.38 and the 1.236. So if we want a 3-wave structure over here to end inside this area, we need quite, at least in general, a deep retracement. And as the most common target for a wave C in an expanded flat ABC is the 1-to-1. So wave A and wave C tend to be the same distance, like the same price movement. And if we want the 1-to-1 to end in between the target area for wave B, it needs to go to, well, basically the 886, which sits at 20.4K. So that would be a very deep retracement before then a move up for B and then eventually down for C. The bullish, however, count is that this is an ongoing impulsive structure. We still have a WXY over here where this was the high of wave 3, this is the low of wave 4, and we're looking for wave 5 to the upside. In this scenario then, we could have a 1, 2, 3, 4, 5, or this is a wave 1 and we're now working on 2 before then 3, 4, 5. Those are scenarios you will see on the lower time frame counts that I have. Now potential trading setup, however, for this scenario is not yet easy to give, because we're still waiting for a little bit more downside, as well as it's still difficult to find some sort of a setup, trading setup based on Elliott waves because of this structure. We need a longer range, we need more clarity in order to actually give, or at least have some insights in a potential medium time frame trading setup. I'm still very interested though in this target area. So this is the one I keep in mind, which you will also see over here in one of my lower time frame counts. Now this is currently my preferred scenario as well on the lower time frame, where we still have some more downside to go. I wrote CVD here in very big letters so I don't forget, because it is important to realize that if we look at the CVD that you see over here, cumulative volume delta, which basically shows you the buys or the sells, basically, is that we currently have bullish divergences building. So on the lower time frame, however, there's some bearish ones, but on the bigger time frame, bullish divergences are building. As you can see from this low over here to this low, it's a higher low, but here on the CVD we are building a lower low. So that is just interesting to note that if we continue to move down, then these divergences might continue to build, eventually maybe even with this low over here for eventually more upside. Now in this scenario, what we're looking at is this being a wave 1, and we're currently in a wave 2. Now once again, this target box is an interesting area between 22.6k and 21.9k basically, which becomes one of my potential trading setup areas. It also has nice confluence with the golden pocket area, this 618 and the 66, which also is the most common retracement area for a potential wave 2. In this scenario, I'm looking for an A to the downside in a 5-wave structure, which you will see in the very low time frame counts I have, followed by then a B wave, which might be in, but I think we might get another little leg up potentially. You'll see on the lower time frame. And then eventually I'm looking for a partner wave to the downside that is basically partnering this move A, because this was fast and swift. So far, we have not really seen a second wave, so I'm still looking for a second part to the downside. Then the other scenario that I have over here is a bit more bullish, and this is basically that this wave 4 is already in over here. The low has then potentially been made, and we then go to the upside. In this scenario also, as you can see, the low of this potential wave 4 would have then bounced on the 382, taken from the low of 2 over here to the high of 3, which is a very valid target for wave 4, and we now move to the upside. However, this is currently a alternative count, not my preferred count, because that's the other one. And the invalidation would be if candles of this wave 4 are going to close below the 0.5, and that's why I've also put the invalidation here, because once we reach this invalidation level, then quite very likely wave 4 is invalidated. So then we go to the very low time frame scenarios. And the first scenario that I like to show you is basically a wave 2 scenario. So then we have once more wave 1, and we're working that on a wave 2. However, wave 2, you know, it's currently very short compared to wave 1. So it would be nice if we take a little bit more time for a wave 2. And in this scenario, this is a wave 1. Then we have a wave 2, before then a 3, 4, 5. And this then is a wave A. Then we go up for a 3-wave structure in a wave B, and then down once more for a wave C. So this would make the correction that we have longer in time, and it's still a 1, 2, and then eventually a 3 to the upside. However, we're now only working on the first part, so let's first see how this goes, because this is very early in the development, of course, of this complex and corrective structure. Then the second scenario that I like to show you is an ABC scenario, where over here is wave C, where we then have a 5-wave structure in wave A, the blue A, currently working most likely on some sort of a WXY structure in the B. The reason is that if I look at this structure over here, it's not as impulsive as this move to the downside, and also this didn't reach the minimum targets for a wave C to call this an ABC. So therefore I think the correction over here is taking longer, and also because this now then becomes a WXY correction, WXY, it becomes more likely this is a B wave, because in a wave 2, if this is a 1, 2, 3, 4, 5, a wave 2 tends not to be complex but more simple, meaning it's very likely to be a zigzag correction, and these more complex patterns are usually wave 4s or a wave B or wave X's. So in this scenario, what I am currently looking for is this being then a W, X, and then eventually we're looking for a Y structure. Now you do see a target box over here. There's a couple of confluences that I do like to show you. We have a daily naked point of control at 24/7. We also have a daily at 24/762, and there is a time naked point of control at 24265. So there's a little bit of confluence over here. Also, the minimum target of a wave Y in a WXY is the 0.618, which we already hit. However, I would like it to, well, I would like a little bit more upside in then a better like 3-wave structure in a wave Y. The most common target for a wave Y is the 1-to-1 and the 1.236, sitting between 25k and basically 25.3k, which would mean we could also potentially take these highs of the W before then continuing to the downside for a leg C over here. to the downside, because we're still then looking for a partner leg of this leg over here. So this was a fast and swift leg to the downside, and we're still looking for a similar leg to the downside, which is matching this one over here. Then two less likely scenarios, but I still want to show you, so these are alternatives, is that this is wave 3, this is wave 4, and then 5, and then in this wave 3 we have a this is where A, B, and then eventually some sort of a C. Now, I don't know what you might find online, but this definitely does not fit the Elliott Wave principle rules, because a wave B, if this is a wave B, it's super overshot, because this target over here is the wave B expanded flat target in a expanding flat. So as you can see, if this is the max target over here and we're down here with wave B, and then this being a wave C, which should be a 5-wave structure, but instead, yeah, if actually then this is a 5-wave structure, so this should be 4, and then we should continue for wave 5. However, we took the lows once again over here, so yeah, this is an unlikely structure. I just want to show you that that is not likely. And then the final scenario I have is this being a 5-wave A, followed by then a B, and then saying that this is a wave C. So then we have an A, B, C. The problem, however, I have with this scenario is that this wave C did not go deep enough. It didn't hit the minimum target of a wave C, which is the 0.618 trend-based fib extension taken from the high of A to the low of A to the high of B. As you can see, we didn't reach it. And also here, the most common target is the 1-to-1 and the 1.236. So that makes this scenario for me less likely. That being said, I hope this video was helpful or valuable to you. Thank you for watching, and I see you at my next update video. Bye bye.